Welcome back to Africa's Boardroom, where we're taking a closer look at the role of Africa as a new frontier for economic growth. Still with me in studio to give their views on this topic are Grant Hatch, he's Senior Executive of Strategy at Accenture South Africa, Professor Albert Volker from Gibbs, and Niagaki Ongeri, Head of Global Finance and Risk Solutions at Absa Capital. Grant, before we went to break, Albert was chatting about local knowledge, having local knowledge on the ground. Is it important for companies entering the continent to have a local partner?
Well, companies follow different models, but what is really important is the local market understanding. And what we've seen in some of the successful companies that have entered into Africa, let's take MTN for example, was where they blended some of their South African expertise in terms of setting up companies and running them with actually bringing on local people who understood the local consumer environment. I think what is really critical is understanding that consumer environment, not taking a Western mindset or view and trying to sell products based on that. And also the operating or the business model. We see some companies, DHL for example, have gone and opened their own companies, set up their own offices, set up the entire infrastructure themselves. Other companies, particularly in Nigeria, have gone in and set up local partnerships where there might be a legal requirement. And so the models do vary, but what's absolutely critical is understanding the local consumer environment. If you're in a consumer environment, of course, is critical to actually being successful, given, as we've said earlier, in the disparate nature of some of the markets and how they differ regionally.
Niagaki, how about raising capital? Do you do that in your home ground? Do you raise some capital in the market where you're entering to give them some skin in the game as well?
Yeah, I think it's a good question. I think that from an investment perspective, it makes a lot of sense. I think most companies will view it from the perspective of coming in with a steady idea of where capital is actually coming from. That being said, I think that there is great benefits to thinking about actually raising capital locally. Because what we've actually started to see in the course of the last few years is that a lot of the regional capital markets have actually started getting much more developed. And this is not just on the equity side, but also seeing it on the credit side as well. So a very good example is the advent of sovereign bonds in, for example, West Africa, with the government of Senegal actually being the first government in quite a while to actually do a sovereign bond in December of last year as well. And the thinking there is that actually provides a basis for other companies that are potentially Senegalese companies to then think about doing an offshore bond very much in the same ilk as the government as well.
Albert, do they have the depth and liquidity of markets, though, to raise capital locally?
Generally not, or doesn't my experience, but you're closer to this. For instance, in South Africa in the mining industry, no, you don't. You certainly don't. Resource, if you're going for big resource seeking, generally you don't. If you're in other markets, other industries, possibly there shouldn't be a major problem there.
Well,
sorry, just to add to that, Albert, I think one of the factors we identified in our research looking at companies in Africa is that one of the big opportunities was to look at sourcing capital locally as it became available. And one of the models is traditionally to use the company or offshore resources to be able to enter markets. And that is a huge opportunity as those local financial institutions develop to be able to start accessing local capital. What we have seen at the macro level is a lot of that foreign direct investment that's gone and has been directed towards big infrastructure projects linked to offset agreements. So although you're seeing a lot of FDI entering into Africa, 27% compound growth rate, so it's enormous. Most of it has been in the infrastructure space, not at company level, and helping companies to actually build local businesses. So that is one of the big opportunities in terms of seeing more companies enter Africa, is local partnerships linked to local financial institutions.
But what we're probably going to see now as the northern hemisphere economies are in this slow recession or slow pulling out of recession, they're going to be looking at replacing their revenues. And so we're probably going to start seeing a lot of merger and acquisition activity in Africa. And
what's looking attractive right now for M&A activity?
Well, definitely telcos. Infrastructure would be looking quite interesting. And interestingly enough, I'd guess more and more consumer type businesses. So we're seeing companies like Unilever changing their strategy quite dramatically to tackle Africa. People are becoming aware of that.
Niagaki, how about security of tenure? Because you don't want to go into a country, then they change all the regulations and decide to nationalize their supermarkets or their gold mines or something like that. That obviously must be a risk for entering.
It is a key risk, and it is a key focus point for a lot of investors. And that's why, for instance, granular detail around the indigenization policy in Zimbabwe, for instance, is very important. or the referendum in Kenya that encases a new constitution that actually protects property rights, I think is important as well. I think just going back to the question of capital as well, certainly agree that there is an inward flow and an inward need for foreign capital into Africa. But let's also keep in mind, if you just look at, for example, the equity markets, there have been $3.5 billion of equity raising that's been done in South Africa alone. In the rest of Africa, there's been $1 billion that's been done in the form of pure equity raising this year alone as well.
Across all other markets?
Across all of the sub-Saharan African markets. So we are starting to see the impetus and the growth of local African markets as well.
Are we still seeing the grants companies really using South Africa as a springboard into the rest of the continent?
Well, I think South African companies entering Africa follow sort of distinct patterns, some successfully, some not, is to treat SADC as an extension of South Africa and often link it to the existing operations. Where they move further north is choosing an area and identifying key markets to enter. I mean, Shoprite is a very good example of a South African company that's gone from 700 stores in South Africa, 125 into Africa with very extensive growth plans focused around very key markets. And the other pattern linked to that is the movement from an informal to a more formal market. So companies have tended to develop strategies specific to markets and with varying degrees of success. It comes back to often, we've spoken about capital, also local talent and how you blend that with the knowledge of the South African business. I think South African businesses that have tended to try and open replica businesses of their South African operations without understanding the local markets have tended to struggle. Those that have actually spent time understanding those markets in detail, built businesses that incorporate that local knowledge have tended to be far more successful. And often where they've been the first mover. I mean, that's one of the big advantages. MTN, Shoprite were into markets where there's much less competition in their domestic market. And so they've gained a huge advantage over anyone else who might be leaving South Africa and have the same aspirations.
Albert, do companies entering Africa have to be prepared to invest in infrastructure? Because we did talk about the infrastructure sometimes being in disarray. Do they have to also invest in local communities?
Yes, absolutely. That's the big difference about operating in an emerging market as opposed to a developed market. Your legitimacy in a developed market is your product and things like that. Your legitimacy that you get in an emerging market is your connection to the community. What are you giving back to the community? And are you here for the long ride, or are you just trying to take money from us?
Do you piggyback perhaps off the Chinese who are busy here building infrastructure across Africa so they can use resources here?
Yeah, I think the Chinese are a case in point in terms of the approach that they've actually decided to utilize in terms of engaging with African countries. It's really one of actually being a provider of infrastructure, not just seen as being a take of resources. The one of the aspects that I will add is the aspect of training local people as well, whether that's within the countries themselves or whether it's giving locals an opportunity to actually second and gain experience and expertise elsewhere. That's a key aspect of strategy as well.
So would you agree invest in skills also?
I think so. I think what companies have tended to do is actually where they've used out-of-country resources to set up operations, is to actually create very clear skills transfer plans to actually make sure that any knowledge that's required is transferred, as well as those people learning the local market. But coming back to the point that was made about infrastructure, what I think is really important is, and the Chinese example of creating the roads and infrastructure around their mines, and South African companies have done that. SAB, for example, has ended up building roads.
So that must obviously eat into your returns, mustn't it?
Well, if you can generate returns of 70%, you can spend a lot on building the infrastructure. But I think what's key around it is once that infrastructure is built, it creates, whether it's a road or telecoms infrastructure, it creates business opportunities that creates a huge multiplier effect. I mean, a great example is the Chinese built a road from Addis Ababa up to Baidar. The first time I traveled, it was a dusty road full of bomb craters from the war, earlier. By the time that road was finished, it still took a long time to travel on it because all the local people were using it as a conduit to run their businesses between settlements. And so you get a huge multiplier effect of people building businesses around that infrastructure. And the same has been very true around the mobile infrastructure and mobile telephony, with massive uptakes in Africa as people use it as their core to actually run the underlying businesses.
Stephen, and I think governments can be smart about this as well. So for example, if you look at what's happening in Kenya, governments have actually introduced a tax break to companies that issue bonds that are called infrastructure bonds. So the intent is you issue a bond, get a tax break on that particular bond, and the proceeds actually have to go towards a particular infrastructure project. We've seen this actually being used by the generating company, it's being used by the big mobile telecom company, Safaricom. So governments can be innovative in this space as well.
Are we seeing governments being innovative enough in enough countries?
Stephen, the frank answer to that is probably not. I think that, and again, I'll focus once again on where I think a lot of impact can be made, which is in the financial markets. If you look at a very good, interesting case in point is, we talk about this growing middle class and consumer class within Africa itself. What we miss out is that there is actually that portion of the middle class that is characterized as being emerging and has difficulty being served by traditional banks. And what we've seen happen in South Africa and we've seen happen in Kenya is the emergence of microfinancial institutions. African Bank in South Africa, Equity Bank in Kenya as well, that services a particular segment of the population. I think governments, my view is that government's objective and what government should be doing is encouraging this type of innovation to actually service classes like that as well.
It also leads to huge opportunities. Once you have that mobile infrastructure in place and you can start creating mobile banking sort of products, for example, is you can reach that class, that emerging class of people that actually would not be using traditional channels and actually build an infrastructure. So there's a lot of opportunity for innovation into these markets that, looking beyond the traditional model of setting up sort of high street infrastructure that people are not going to simply use. It's too expensive.
And of course, that's just another example of companies adapting their business models for the African markets, isn't it, Albert?
Yes, absolutely. We've seen examples of it. MTN, we all know very well. South African breweries selling most of their product through informal channels, credit control, all these interesting things that people from developed markets would never have thought of. They're being done in Africa. And what is really interesting is these things are being done often in one firm. So the firm's got a almost schizophrenic character to it, where it can serve at the bottom end and at the top end, all within the same firm with the same infrastructure. Now, when you're looking at an acquisition and you're a northerner, this is very, very attractive. And then you're going to try and transfer this back into your firms.
Nyagaka, Africa, the land of opportunity at this stage, but there are still some risks ahead.
There are still some risks, but I think what we're starting to see is we're starting to see the discerning investor, like I said at the very beginning, start to actually pass the risk and the reward. An interesting case in point, and frankly, a really intriguing one is Zimbabwe at this point in time, where the traditional consensus as far as Zimbabwe goes is that it probably still is in gestation, waiting for whatever the next evolution is within the country's political process. But what you are finding is that you are finding some non-traditional investors start to look at Zimbabwe as an interesting opportunity.
James, I'm afraid we're out of time. We have to leave it there. Thanks very much for coming in tonight. That's all we have time for in this edition of Africa's Boardroom. Thanks again to today's guests. That's Grant Hatch from Accenture South Africa, Professor Albert Voka from Gibbs, and Nyagaka Ongeri from Absa Capital. From me, Stephen Gagnon, it's goodbye.